Dr. Kim Anderson joins us now, our crop marketing specialist. Kim, there have been some dramatic changes and shifts in wheat prices, as we know. How did the current prices get to this level?
Well, let's start with what caused the price increase. You go back to January of 2020, we had wheat prices down in the $4 range. We came through here recently, we had them up to $13.30. So let's talk about that price increase. I think the move from around $4 to $8 was because of COVID. And I think it was a demand-driven move. You can look at production in 2019 was a record 28 billion bushels. Use was 27.4 billion. So we built stocks that year. But when you got to 20, you had a 1.3 billion bushel increase in demand, and wheat production only increased by 500 million bushels. So you had a shortage and we reduced stocks. So every year for the last 3 years, we've had, except we had a slight decline in production this year, but we've had record use. And I think that use was because of hoarding food stocks. Now the last move from 8 to 13, I think is the war. With Russia, Ukraine shutting off the Black Sea, you took 30% of the wheat off the export market, and that's going to have an impact. And then there's inflation. Outside money moves into commodities when there's a fear of inflation, and that's what we saw happen on that move up.
Since mid-May, we've seen a $5 decline. What is behind that particular adjustment?
Well, that's the reverse of what we saw with prices going up. And I think first we can go to COVID. You know, the COVID impact is disappearing, especially in the transportation. And outside money has came out of the markets. And when they came into the markets, they bought the commodities. When they came out, they sold them. You sell, big mass drives prices lower.
So what do you think prices will do from here?
Well, that's anybody's guess. You look at northern Oklahoma, we're about $8.25, slightly lower than that, a dime or two if you're looking at 23 prices. Southern Oklahoma, $7.75. I think you got to look at, when you're thinking about what prices are going to do, look at Russia. We've had Russia's exports on wheat and other commodities are about where they were before the war started. Ukraine started shipping commodities out a couple weeks ago. I think a good thing to look at is the stocks to use ratio. 5-year average for the world is 39%. This year, 34%. So you got tighter stocks. You look at U.S. total, 50% for all wheat down to 33%. Hard red winter, 61% down to 39%. We can't build those stocks back up until we get into the 23 harvest. So I think these prices will hold for a while, and I'm looking for a range of maybe $7 to $10.
And that's still not too bad. Let's talk about, of course, last but not least, corn, soybeans, and cotton.
Well, we've seen about the same thing with corn. You know, Ukraine, they're a relatively large exporter of corn. Their shipments, their first shipments out are corn, and so they're starting to move it on the market. And so we've seen corn prices drop from 7 down to 5.50, come up to about the 6 range. Soybeans, I think we're looking at soybean supply, and I believe that sets a pretty good range from somewhere around $12 and $15.
Lots of good information and analysis this week. Kim, thanks a lot. We'll see you next time.